Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. The government's budget position swings to a surplus in October as revenue collections outpace expenditures. Meanwhile, the farm trade deficit widens by 1.5% in the third quarter. A study shows that the Philippines ranks among the top 10 countries in terms of mobile usage gap. And heads up for Wicked fans, the iconic ruby slippers worn by Judy Garland in the classic film The Wizard of Oz are going up for auction in the United States. First, a recap of the financial markets. Wall Street's main indices closed lower overnight, with the Nasdaq leading the declines. This comes on the back of concerns that the Federal Reserve may be cautious about rate cuts after strong U.S. inflation data. Consumer spending, which accounts for more than two-thirds of the country's economic activity, rose 0.4% last month.
Well, the personal consumption expenditure, or PCE report today, I think, allowed investors to breathe a sigh of relief, because even though the expected numbers were a little higher than some previous months, they did come in as expected. So with no surprises, it actually allowed investors to feel that there's a greater likelihood that the Fed will be cutting interest rates when they meet at the next FOMC meeting in December. So as a result, I think that investors now believe that we are on a firm footing to the Fed continuing its easing process, but probably shifting to a quarterly reduction in rates in 2025 rather than doing so at every meeting.
Over in Europe, markets closed mostly lower, with France's CAC 40 falling 0.7%. This as investors continue to assess the potential impact of U.S. President-elect Donald Trump's plans to hike tariffs. Here in the Asia-Pacific, shares opened mixed after Wall Street's rally stalled. Also in focus today, the Bank of Korea's latest policy decision. It is expected to keep its benchmark rate unchanged at 3.25%. Over in the commodities market, the price for Brent crude is up, trading at $72.79 a barrel. Now, gold prices also rise, trading at more than $2,600 per troy ounce. Now, the government's budget position swings back to a surplus in October thanks to growth in revenues. The government posted a 6.3 billion peso surplus for the month, which is a reversal from the 34.4 billion peso deficit recorded in the same period last year. Revenue collections accelerated by 22.63%, outpacing expenditures, which increased by 11% year-on-year. The surplus helped narrow the year-to-date deficit to 964 billion pesos, which stands at only 65% of the 1.48 trillion full-year program. This means that the government is more efficiently collecting revenue, which helps reduce the deficit and improves the country's financial stability. Now, the farm trade deficit widens by 1.5% to $3 billion in the third quarter. This means that the country is importing more farm products than it's exporting. Data from the Philippine Statistics Authority shows that exports rose 22% to $1.97 billion, while imports increased 8.7% to $4.99 billion. Malaysia was the top export market, accounting for $121 million, or 50% of the total share. Now, the World Bank is lending the Philippines $500 million to help rebuild over 3,000 schools damaged by the recent typhoons. Finance Secretary Ralph Recto signed the financing agreement with the World Bank's country director. The project will be implemented this year until 2029 and led by the Education and Public Works departments. Recto stresses that poor facilities affect both students and teachers, weakening human capital, reducing productivity, and driving poverty. Hence, he says that the government is prioritizing investments in resilient school buildings. This investment in education infrastructure is critical for the country's long-term development, as improving school buildings will enhance learning environments, boost productivity, and help reduce poverty in the country. Now, the Philippines may have a strong online presence, but a new study reveals that a significant number of people still lack access to mobile internet, highlighting a digital divide that could impact economic and educational opportunities. Sujin Kim has the details.
As of August 2023, more than 113 million SIM cards were registered by the government. However, the Philippines still ranks among the top 10 countries in the world in terms of usage gap. According to the group's Special Mobile Association, or GSMA, 55 million, or over 45% of the population, do not use mobile internet. This is due to the high cost of mobile phones and limited access caused by insufficient infrastructure.
Philippines is known for being quite cost conscious when it comes to users. The coverage gap is clearly a complex geography. The usage gap is also still high. Now that is not unique to the Philippines. Countries of similar GDPs or maturities and economies in that same sort of ballpark.
According to GSMA, improving mobile and digital infrastructure will enhance the economy and productivity.
About increase of 5% in mobile broadband is like a 1% boost on your GDP. So there's a direct link between getting people connected, because getting people connected allows them access to education, health, open business.
One of the benefits of mobile internet are digital wallets, which, according to the GSMA, is helpful for the unbanked.
E-wallets offers an opportunity for people who don't have a bank account to transact digitally. And that's obviously very important, because I think it's not that many years ago when we had COVID and we couldn't go out, do anything, and the only way that we could transact was digitally. So enabling people to have a wallet is very important.
The big push around mobile money was connecting or getting the unbanked banked. In actual fact, the research we've done shows that in places like the Philippines and Indonesia, there's still a lot of unbanked, but they have wallets.
Globe is one of the leaders in integrating e-wallets and other financial services into national programs to promote financial inclusion.
When we look at what our real purpose is, we said that we wanted to be the digital enabler for the Filipino nation and for the Filipino nations to address the common day-to-day issues that they have.
Recently, Globe CEO Ernest Chu was also appointed to the GSMA board. The GSMA board is 25 of the largest and most influential telecom operators in the world, including AT&T, Verizon, Vodafone, and Dutch Telecom. Sujin Kim, BNC.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points Trading at the Philippine Stock Exchange. Opened just a few minutes ago. Let's take a look at the initial figures. Right now at 9:39 this morning, the PSE index is in the red, down by 0.4% to 6676. Now tracking the losses in Wall Street overnight. Yesterday, the PSE index sank to the 6700 level after U.S. President-elect Donald Trump threatened to slap tariffs on imports from China, Canada, and Mexico. Now the peso's weakness also dampened investor sentiment. Yesterday, the index lost 1.53% to 6703. Right now, we've fallen to the 6600 level. We're at 6676, down by 0.4%. Broader all shares index in the red as well, not down by as much, down by just 0.2% to 3753. Taking a look at the sub indices, the financials, industrial, services, and property counters are in the red, with these services markedly lower, down by over 1%, down by 1.2%, whereas the holding firms and mining and oil counters are slightly bucking the market's current downtrend. Meanwhile, at the foreign exchange market, the peso opened stronger against the greenback at 58.70 compared to its previous close of 58.71. Now, to help us make sense of the recent credit rating upgrade by S&P Global Ratings, we have with us Angel Passes. She's the CEO of AIA Investment Management and Trust Corporation. She's going to help us put all of this into perspective. Good morning, Angel, and thank you for being here with us.
Good morning, Maiki. Thank you for having me.
Okay, Angel, let's unpack this. The S&P 500 ratings agency just upgraded the credit outlook for the Philippines from stable to positive, meaning we've become more creditworthy, and this means less interest payments. Can you break down exactly what this means for the Philippines in terms of global perception, foreign investments, and borrowing costs?
Okay, so you've already mentioned that, that means lower rates because the rating determines how much extra interest our lenders will demand from us if we borrow. So, but also remember we're already at triple B, right? Triple B, we positive outlook triple B plus. What that means is there's a very high probability that you are moving to the next stage. And as it is, right? If this were a beauty contest, you're actually in the magic 5 circle with your current rating. So what does that mean? Access all around is going to be easier for a country that is within that magic circle. So you have easier access and also lower borrowing costs. Now, just to give you an estimate, right? As of September 2024, your public debt is about what 15.8 trillion. If you actually just reduce, for us to visualize, if you actually just reduce interest rates by 1 basis point or 0.01%, that technically means 158 billion of savings that could be channeled into social services and infrastructure spending.
Yeah, the improved outlook is going to lead to cost savings, which can be powered, which we can use to power other things, other major programs that the government needs. Now, I like how you likened it to a beauty pageant. It puts things into perspective and makes it a little easier to digest. In that regard, Angel, the next step in this pageant is A-, and that would be a significant milestone for the country because it would mark our first ever A rating by a major credit agency. What are the key factors that could possibly lead to a rating of A for the Philippines within the next 12 to 24 months?
Growth. The GDP, if we're currently growing right now, we're still growing above long-run average. And we're also one of the fastest growing countries in a good neighborhood, which is actually ASEAN. Now, why is GDP important? GDP determines the ability of the government to raise taxes, and taxes represent actually the revenues that we will use to pay off that debt. So if that's really very important. And also another plus really is, the messaging of the Philippine government is that they will actually practice fiscal discipline, right? Meaning they'll try to avoid spending so much more than what we are making. And that also improves our creditworthiness or our stature in the global financial community.
That's right. Growth will lead to more taxes. More taxes mean more money for the government to spend. And Angel, you mentioned the government's fiscal discipline. So I also wanted to ask you, what does the credit rating upgrade say about the growth prospects overall, our investment climate, and the government's fiscal discipline? How has it been thus far, given this rating upgrade?
Okay, so remember you're coming from a period of very high interest rates, and yet despite of that, we've grown above your long-run average. It's on average about 5.5%. So that's actually a very good sign. Now, that given the specter of actual rate cuts next year, that should actually make our growth resilient. And another thing that's going for the Philippines is that, everybody's worried about what a trade war is going to do. So that because the Philippines is a less open economy, meaning we are less dependent on trade as an engine for growth, that leaves us a lot more resilient than other countries, maybe in the ASEAN.
Okay, interesting. Now, with this improved economic outlook, investors are looking to capitalize on the gains that will come to fore. At the onset, Philippine bonds look more attractive. But the long-term run, how does this benefit both bonds over the short term and equities over the long term?
Okay, so right now the overall picture is a little, tentative, mainly because everybody's waiting for how President Trump's policies will unfold, right? So on the fixed income side or the bond side, they're worrying about deficits, inflation, and higher interest rates. They're worried about how the trade war will affect growth, right? So, this upgrade is really important in the sense that it actually reinforces the view that, regardless of what the outlook is, it looks like the Philippines is going to weather it very well, such that the ability to pay will remain constant.
Yeah.
Or improve, yeah.
Okay. Now, speaking of today's environment, the BSP is going to be meeting in December. The BSP's monetary board is going to be talking about interest rates, as will the Federal Open Market Committee in the United States. We don't operate under a vacuum. How might what they do affect us, and what's your outlook for what the BSP might do in terms of monetary policy? Earlier in the newscast, an analyst from Wall Street said that, in so much so he said that the rate cuts in the U.S. won't be as fast and as furious as everyone expected it to be. What are your thoughts on this, Angel?
Okay, so on our end, while we do have some short-term inflation pressures coming in December, the expectation is we're really on track, right? To stay within the band. Inflation expectation for the Philippines is still pretty good. So what will actually determine what's going to happen in December? They're gonna take a look at what the Fed might do, right? They're gonna talk because remember the peso has been under pressure, so we actually need to move in step, because if we cut faster than the U.S. Fed, that could have an impact on the peso. And as you know, when the peso depreciates, it has second round impact on inflation. So I think they will be it's going to be measured in the sense that, they're going to take a look at more or less what the Fed is going to do.
Meaning if the Fed takes a pause, we may do so as well.
Yeah, most likely if the pressure and the peso is still there. But, we've always, the BSP has always been very independent, looking at the views, but they're also very practical in the sense that we don't we are not in a vacuum.
Correct. In any case, what we need to remember is that we are still in an easing cycle.
Yes, definitely the rate cutting cycle is here. Now the question is how much lower. What is our terminal rate? How much lower are we going to go, and how long does the whole cycle take? And a lot of it is really going to be dependent on, what happens after President Trump takes on the presidency. We already know his policies, and he's known to follow through, but the devil will always be in the details, right? It could be something very serious, or it could be something mild. If he just looks at if the trade war is actually isolated to China and other countries where they have a big deficit, that's fine. If they look much lower, then it will have far-reaching effects that we cannot estimate at this particular point in time.
Correct. Yeah, that's right. That's why all the forecasts have been tempered, because Trump 2.0 right now, it hasn't really even happened yet. And the weeks to come will give us a clearer picture. Now, on another front, Angel, I wanted to talk to you about the political dynamics and its effect on investor confidence in the Philippines. The political noise here at home surrounding key figures, Vice President Sara Duterte, President Bongbong Marcos, they've been dominating the headlines as of late. How do you think these political dynamics figure into investor confidence?
Okay, so we actually asked some of our foreign fund managers yesterday as to how they're viewing it. So actually they're not talking about it, so which is actually good. I guess it has a lot to do with the fact that Philippine politics has always been viewed as colorful. So if it just stays the way it is, like it's really just noise, right? Remember, our politics has always been noisy. If it stays politics, then I think we should be okay. But if it escalates into something more concrete, then that is going to be a cause for worry.
Okay, it's interesting you pointed that out, that the Philippines has always been noisy politically in this regard. For as long as the noise stays noise and doesn't, escalate into destabilization, we're good. Okay, all right. Another thing, Angel, I wanted to talk to you about a specific asset class, cryptocurrencies, because they've been gaining traction as a medium of exchange. What is your view on Bitcoin and its long-term, place in investment portfolios?
Okay, so it will definitely be, unless another disruption happens, it will become more mainstream, and therefore the long-term value has to be there. But my view is that, it is also very volatile. It's at the top now, but it's been known to drop 40% in a month or so. So sure, take a look at it, but make sure that you actually have the tolerance to withstand the volatility. And for the average Joe, it's just not there, right? Maybe if you're gonna dabble into Bitcoin, you're better off either you have a lot of buffer or you do it through professional fund managers.
All right. Last question, stepping back a bit and going back and looking at the Philippines specifically. As we look ahead into 2025, what excites you most about the changes that are ongoing in the Philippine economic landscape?
Okay, so growth is still there. Resolution actually on how Trump's policies is going to unfold, right? Because as you said earlier, it's already the rate cutting cycle is baked in the cake. So and valuations are actually very attractive at this point, right? If you actually have a long run perspective, you should actually be taking advantage of any weakness that's going to happen, so to be able to build your portfolio. So really, when you look at it, right, GDP is good. You're relatively more resilient. Earnings growth is still going to grow double digit for 2025. What actually is going to take center stage is Trump 2.0, as you aptly called it. But if it actually becomes really something more serious, then that just means you'll be able to buy. You'll be able to buy and build your portfolios at much better prices, and that has a big impact on long run returns of your portfolio.
All right.
Actually, a very contrarian, Maiki. I like buying when there's blood on the streets.
And that's when things are on sale, right?
Yeah. Yes.
Okay. All right. Angel, thank you so much for helping us unpack all of these topics. And this is a continuing discussion that we're going to have. And we look forward to having you again with us to unpack even more developments as they come.
Okay. Happy to be here, Maiki. Thank you.
Okay. That was Angel Passes, the CEO of AIA Investment Management and Trust Corporation. Now, in other news, London's iconic Tate Modern is currently hosting an exhibition that takes us back to the roots of art and technology. The expo explores the creative interplay between art and tech from the 1950s to the early 1990s. Featuring works from over 70 international artists, the pieces include impressive installations using light, movement, and images generated by computers.
Loads of young artists are using the tools of digital media to make their work. But what we wanted to do as a museum is to tell the backstory of that tendency and to really look at the pioneers who, before they had the incredible capacity of contemporary computing, were imagining the look of the world we inhabit now. It shows you that the anxieties around AI are not new. They were all there, and artists were also thinking in the Cold War period, how do we turn the potential threat of technology in weapons into something optimistic and utopian, and how do we connect with other people in doing that?
The exhibition, called Electric Dreams, Art and Technology Before the Internet, runs until June 1st. A fascinating look at how past innovations have shaped the art and technology of today. And before we go, still on a wicked high, well, here's some news for you. An iconic piece from the 1939 film, The Wizard of Oz, is going under the hammer in Dallas, Texas. We're talking about the original pair of glittery ruby red slippers worn by Dorothy Gale, as played by Julie Judy Garland. The slippers, which are currently on display in London, are one of only 4 surviving pairs made for the movie. The auction, which will be held next month, provides a unique opportunity for collectors and businesses in the entertainment and auction industry. For the global business community, this event highlights the value of cultural icons as a commodity, the rising interest in pop culture memorabilia, and the global market for historic artifacts. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.